this weird market is where we could have a recession, even a significant recession, and still have very low housing inventory and very low rates of foreclosures, because the poison pill that I talked about over 2 years ago, before anybody was talking about it, the poison pill of these extremely low, artificially low mortgage rates that will constrict supply for decades to come.
And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
Welcome to episode 1901. Thanks for joining us today. You know, I've been wanting to share this with you for several weeks now because it's just shocking. Now, if you look at monetary history, you might know that the United States had a bank holiday. Yes, a bank holiday. Let's give the banks a holiday. You know, there's actually a law. I believe the banks are not allowed to be closed for more than 3 consecutive days. I don't quote me on that, but I think that's the law. You know, people have to be able to access their money, right? That's the way the system should be. And it is that way. However, coming to a neighborhood near you, coming to a bank near you, this may all be changing. And we see that happening in other countries that are in financial distress. And I'm very concerned that we could see that here in the US. Again, we've seen it before. It has happened in the US. Just look back, type in bank holiday, do a search. You know, I'm sure one of your fellow humans has written many articles about it, blog posts, you know, videos, whatever. And just learn about bank holidays, because when things get under pressure, and the pressure has been mounting and mounting and mounting for decades. Now, here's the thing. So many of the doom and gloomers out there, they will tell you that there is this imminent collapse. It's going to happen tomorrow. You know, it's going to happen in 3 weeks. And it never does. Because the big question that none of us know, is how long can they kick this can down the road before, what's the saying I want? The cows come home, the roosters, what's the rooster one? I don't know. Ask a farmer. I can't remember it at the moment. But anyway, I've been busy with tornadoes and hurricanes here in Florida, and was awoken this morning at about 2:30 or 2:40 a.m. or something like that, with all of the phones in the house going on an alert, that alert message that just startles you. But you know what's so amazing? Here's what's so amazing. That I actually woke up just before that. How many of you believe in ESP, extrasensory perception? By the way, this is a tangent alert. Tangent alert! You know, I should tell you sometime an amazing, scary story that really shook me in my childhood in 9th grade, when there was an attempted robbery or an attempted murder, or I don't know what it was, attempted, but where my mother woke up in our house literally 1 minute before a man entered the house. It's a shocking, chilling story. And that in 9th grade really shook my view of security in the world. I was scared. But it's amazing. It amazes me how incredible humans are, and how we can perceive things, and how there is so much more going on out there that we simply cannot explain and cannot perceive. You know, there's this whole movement now to check out psychedelics, right? Michael Pollan, the famous author, wrote a famous book about it. You know, he's got some good videos that you can see. And, you know, it's opening these doors to perception that we really can't explain. But look, 100 years ago, if someone said we could do all the stuff we can do today, they would have thought you were crazy. Of course, you know, they would have said that's magic, right? The things we have today. You know, it just takes time till we uncover these things and are able to explain them. So actually, before that tornado warning happened here in Palm Beach, Florida, I actually woke up just a minute before, kind of rolled over in the bed and kind of opened my eyes, and then the phone goes, "Toot!" And, you know, that's just incredible. So yeah, went down to the shelter spot in the house and hung out there for about 40 minutes. And Thankfully, no tornado, but I believe a friend of mine sent me an article about how a tornado did hit Delray Beach, which is not too far from me. So I haven't had time to read that. So hopefully everybody's okay. But yeah, this might be a Cat 5 hurricane coming at us. It's pretty crazy. My first one. And all of you know, if you've been listening for any length of time, that I have a strange fascination with storms. I always have. I love storms. So I'll get to experience my first hurricane. I'm not right in the path. It doesn't look like it unless it changes course. But yeah, I'm excited and concerned at the same time. And hopefully everybody will be okay, but it's crazy. But a storm, a natural phenomenon, a hurricane, a tornado, whatever, right? It's like God is putting on a show and showing how powerful of a force God is, right? Because this is way above anything mankind can do. And it's different every time, just like every sunset is different. There are no two sunsets that are alike, and that's why they're so magical. But anyway, gosh, where was I? Okay, bank holidays. Getting back on track here. Bank holidays. So yeah, the concern here is that when we have a central bank digital currency, a CBDC, a digital dollar, which we will, it's coming, the control, it won't even be about a bank holiday anymore. It'll simply be the click of a mouse, the push of a button at our centrally planned economy. They can change the value of our currency, the ability to access our currency, the places we can use our currency, our digital dollars, probably through our phones, and the times of day we can use it, the location. If there's another lockdown, maybe it'll be a climate lockdown because we got to lock down humanity to save the climate, right? Maybe we can't use it more than a mile from our house or more than, a certain distance from our house. We got to stay in our neighborhood because, they don't want us driving far and, polluting. Maybe it's a certain time of day. Maybe your currency is only good from 9 a.m. to 5 p.m. and you're not allowed to spend after. Maybe they don't like something you posted on your social media account, and maybe your currency won't be useful to buy internet access or cellular phone service or electricity. Maybe that's the way you'll be punished. Maybe there will be a social scoring system, right? Like they have in China. This is all coming, folks, and it is a huge concern. We should be very, very concerned about it. That said, the predictors of disaster are always wrong because disaster is a more iterative process. It is a more subtle thing where our freedoms are being taken away slowly, where our money is being debased slowly, and digging a hole in your backyard or getting that cabin in the woods, probably not that necessary. Basic survival skills and preparedness, very necessary. Again, like I always say, remember I host another podcast called The Holistic Survival Show, protecting the people, places, and profits you care about in uncertain times. And in doing over 250 interviews of preppers and survivalists, I realized that prepping and survival, it can become a sickness, like anything, an obsession. And I just want to say that I'll call it the prepper lifestyle, but I'm going to say it's not a lifestyle. It's simply a task on your to-do list. You do it and you're done. That's it. You don't make it a lifestyle. Like I always say, some of these people are so prepared for the end of the world to make sure they will survive, that they will keep living, right? Well, in theory, the rest of us die. But the problem is they're so busy with that they never actually live in the first place. Prepping is not a lifestyle. It's a to-do list item. Just take care of it. It's simple. It's basic. It's pretty easy. Starting at a few $100s and moving on up from there. But it's not a lifestyle. Just something to do and you're done and you take care of it. Anyway, back to the bank holidays here because we got a few other things. I want to talk to you about property inventory and the state of the market here. We haven't talked about that a moment. Our last show was a 10th show, obviously, with the famous author and friend of mine, Rollo Tomasi. Controversial show, and I got a lot of nice feedback from all of you. Thank you for the feedback on Rollo. It sounds like you liked that interview quite a bit. It was a long one, our longest 10th episode show ever, close to an hour and a half there. So check that one out. We always go off topic for a 10th show, discuss something of general interest. Okay, I'm just way on too many tangents this morning. Bank holidays. So in Lebanon, people are robbing banks, not to steal other people's money, simply to get their own money because the banks won't give it to them. Yes, this article, if you're watching on video that you see on the screen, already angry bank customers here are about to get angrier. Lebanon shutters banks indefinitely. That's a bank holiday after heist spree by patrons trying to access trapped cash. If you're in Lebanon and need to do regular banking, better download the app and expect the usual limitations on how much you can take out, right? That's because the banks, after being closed for 3 days already, most banks are now shuttered indefinitely after a rush of customers conducted armed robberies in recent days to access their trapped money. Per the Financial Times, the nation's banking association, which represents the majority of banks there, cited, quote, continued risk to bank employees and customers. Well, I don't think they care about the customers. Obviously, it's the bank employees and the institutions they care about, right? This is crazy. A woman robbed a Beirut bank with a toy gun, demanding her life savings to pay for her sister's cancer treatment. All she wanted was her own money. She wasn't robbing the bank for the bank's money. She just wanted her own money. Isn't that shocking? Adding to the anger, a report released last month by the World Bank that alleged Lebanon has been running a Ponzi scheme of sorts, and that many customers' funds had been misused and misspent over the past 30 years, per the Financial Times. Wow. The United States has been doing the same thing, basically, to one extent or another. This is what fractional reserve banking is in some ways. Some components of it are, in essence, you could argue they're a Ponzi scheme. No question about it. Okay. Now, Ponzi scheme law is, like every law, very complex, but yeah. So anyway, isn't this just fascinating? People are robbing banks just to get their own money. They don't want to take anybody else's money. They just want their own money that they can't get access to. Really, really scary. Okay, let's look at housing inventory. And one of our listeners and friend of mine, Tim Klein, sent me an interesting piece I want to share with you here in a moment. But our latest data, if you're looking on the screen here, is that we've had 2 weeks of rising inventory, but it's very slight. Again, not a substantial amount of rising inventory. Housing inventory nationwide up to about 557,000 homes for sale. So that's about 1/2 to 1/3, depending on whose opinion you seek out, of normal inventory. So inventory is still extremely low. We are seeing significant deterioration in the market for the higher end properties, but not yet, at least, in the lower end properties that make good investment properties, that are good rental properties, the properties we are interested in, the properties we want to buy. So if you're out there looking for a high-end home for yourself, you might want to wait a bit, because that's one area where you could probably time the market with a reasonable degree of confidence. The high-end market is continuing to decline. The same is not true in the rental property market. And if you're going to try and time it, we've talked about this ad nauseum on prior shows, I think you're going to be disappointed. So the article here that Tim sent over, he said this is a pretty good summary of the market, although he, meaning the author, and this is Cromford Report, which we've had on the show twice now, and they simply do the Phoenix metro area. But I think what they're saying is really a reflection of the broader market, and that's why I'm going to share this with you here. And this is Tim's commentary. Although he needs to address the 3% mortgage holders as the reason for low supply, and I couldn't agree more. We are in and moving more into a very weird type of market, folks. A very weird type of market. I mean, the Fed is raising rates, and it's freaking people out. In the stock market, the housing market, and oddly, the cryptocurrency market, which should be doing the opposite of what it's doing, but is not acting the way it's supposed to act. So this weird market is where we could have a recession, even a significant recession, and still have very low housing inventory and very low rates of foreclosures, because the poison pill that I talked about over 2 years ago, before anybody was talking about it, the poison pill of these extremely low, artificially low mortgage rates that will constrict supply for decades to come. Okay? So this article that Tim clipped for me. After the most dramatic changes in supply and demand between April and July, the market has settled down and is making only small moves over the last few weeks. Despite the recent rise in interest rates, demand has not collapsed further, but remains pretty much at the same level as last month. Okay? So it is lower, but nothing like a collapse, folks. And I hope you can tell when I'm reading versus narrating. I'm sure you can tell, so I don't have to say it. Okay. The arrival rate of new listings for sale is very low for this time of year. So in complete contrast to the second quarter, we now have low new supply to accompany lower demand, right? Contracts are being signed, but slowly. So the active supply count is drifting higher as listings stay on the market longer. And remember, Phoenix, of course, folks, is a cyclical market. So when you hear what's happening there, and you take the linear markets that we like, and the hybrid markets to a lesser extent, you have to realize that this is less pronounced. I'm sharing with you what's going on in a very cyclical market, a boom and bust market. That's Phoenix metro area. Things are surprisingly normal in terms of balance, but transaction volumes are much lower than we have been used to over the past decade. See, this is one of the other things you got to really remember. The real estate industry as an industry is a pretty big industry, right? There's a lot of realtors out there, title companies, attorneys that do closings, lenders, of course, that are under severe distress right now, the mortgage people. Their incomes have all declined dramatically. Their revenues have declined dramatically. So, that trickles through the economy, of course, right? There is little downward pressure on prices in this situation, and what pressure there is has been largely caused by the overstocked iBuyer Opendoor. Now, we haven't talked too much about Opendoor and the iBuyers, a little bit, but y'all know the Zillow fiasco that we had, and now the next fiasco is Opendoor. Okay, another iBuyer, these big companies that think they've figured out the real estate market, and of course they haven't, and they think they can, disrupt it. What I always used to say when I train real estate agents, and I've trained thousands of real estate agents, that used to be the way I train investors now and teach investors now. I used to teach real estate agents, okay? I know that the way that market works intimately. Here's how I used to describe it. Everybody's talking about disrupting the real estate market. And I described it like it's one big giant marshmallow. And you take your fist and you cock your hand back like you're going to punch it, and you punch the marshmallow, and your fist goes way in and your arm goes way into the marshmallow, and then you pull it out and it just reverts back to its normal shape. All of these tech companies that think they've figured out the real estate game, they haven't, okay? It's still a low-tech business in essence, with realtors and people transacting the way they have for 100 years. Around the edges, around the margins, yeah, there's some little changes, but overall it's not significant, at least not yet. We'll see in the future. Everybody says, oh my gosh, virtual reality is going to put all the realtors out of business. Don't hold your breath. Okay, don't hold your breath. Other sellers are being more patient. Now, why can they be patient, folks? They can be patient because they got these low-rate mortgages. Everybody in the world refinanced. They're not under any pressure. They might want to sell their home. They might want to do something different, but the pressure is nil. Why would they trade their 3% mortgage for a 6% mortgage? That's me editorializing, not the article. If you have to sell quickly, you are facing a challenge and will probably need to sharpen your negotiating pencil. But foreclosures are at very low levels, and anyone who expects a flood of distressed properties and lender-owned homes to drive prices down is dreaming of 2007 It is not happening in 2022 and probably not happening in 2023 unless economic conditions deteriorate far more than anticipated. See, they're already predicting more deterioration in the economy. And I would agree with that, by the way. But you're just not going to see it, okay? This is not a crash, the article says. The overabundance of enthusiasm and confidence we saw in March has evaporated, and the market has started operating like it does when overall supply and demand are in balance. And by the way, they're not in balance yet. The inventory that's on the screen, you're looking at it if you're watching the video version of this show, shows that we only have about 1/3 to 1/2 of the listings needed to be in a normal market. There is a strong overtone of fear, but this fear is not based on anything more solid than uncertainty. This calls for marketing skills and patience, and by the way, their audience is realtors, so that's who they're talking to when they say that, not panic and freakish discounting. Keep calm and carry on. Remember during World War II, that's what the signs used to say in the London subways. You might think that mortgage rates over 6% are a big problem, but the housing market has operated for many decades with rates over 6% without causing a meltdown. I remember when anything below 8% was regarded as a cheap loan, the article says. Yes, demand will be much lower while rates are high, but the thing everyone has to fear most is an overabundance of supply. Right now, the evidence points the opposite way. New supply is tight and looks likely to remain that way for some time. You know what? I think that article really nails it. And if they're saying that about Phoenix, the markets that we're recommending, the markets we're in, the markets you see at jasonhartman.com are dramatically stronger than what I just shared with you. Okay? So there you go. There you have it. Thanks, Tim, for sharing that with us. Okay, don't forget, save the date. Since we're talking about Phoenix, right in that metro area in Scottsdale, our live event, Empowered Investor Live, coming up January 27th at a beautiful, gorgeous resort in Scottsdale, Arizona. And it's a 2.5-day event. We're going to start Friday right after lunch. We're going to go the afternoon Friday and the evening Friday. And then we're going to go all day Saturday. We're going to have a great band on Saturday night, some dancing, some fun. You know, I like to cut a rug. If you've been to the events, you know, not that I'm the most skilled dancer, but I do enjoy myself. And we'll do that, and then we'll go all day Sunday as well. If you're flying in for this event, which most people are, of course, you'll want to get a flight out after about 6 or 7 p.m. on Sunday, if at all possible, so you don't miss that. And we're going to have some great speakers for you. We get such great reviews on our live events. And, you know, when I say that, I'm not bragging. Really, what generates the great event, I mean, we just create a space for you, but it's all of you. You're the ones that make the event great. I just love seeing all of you, and I love seeing you all networking together and, you know, rekindling old friendships and just having a great time together. It's just so great to see that. Whenever we have an event and I watch the videos of the event afterwards, and I see all of you hugging each other and shaking hands and sharing ideas, it just warms my heart. But before this event, of course, we have our virtual event coming up, Recession Proof Investing Summit, and that's just a week and a half away. So be sure you register for that. Go to jasonhartman.com. It's right at the top of the page. And that's a virtual event, real easy on Zoom. It's Friday evening and Saturday for a few hours there, and real easy event. And we're going to offer you a nice big discount for our live event at the virtual event. So be sure you attend that. Okay. Go to jasonhartman.com to register. And I know what you're going to say. Do you have a direct place, Jason, where we can go and register for the live event right now? No, we don't. We'll have a place for that after the virtual event for you, okay? Because we're going to offer a nice discount at the virtual event. So after the virtual event, in a week and a half, we'll have a page that's live so you can register for the live event. So, okay, I want to just remind you of things I said last week, because these are important and you really got to see them. This chart from Inflation Tracker on Twitter, rates up, rents up. Remember, interest rates, or mortgage rates, I should say more specifically, and rents are correlating indicators. People that own a bunch of investment properties, they actually welcome and like higher interest rates because it reduces the supply of rental housing because new investors can't get those mortgages as easily. And so they can raise their rents more dramatically. And guess what else? And this is the bigger one. People in the renter market cannot afford to move out and buy. So that puts more upward pressure on rents. You've seen my presentation probably over the years on the 3 dimensions of real estate, where I've been explaining this since 2004, and it's really important to understand that. And then my Twitter post, which by the way, I'm sure has a lot more activity now, but this is the old version of it right after I posted it. Myopic people are focused on housing prices when they should focus on yield or return on investment. That's what investing is all about. And that is so important, folks. It really, really is. So that is it for today. Just go to jasonhartman.com. Join us for our virtual event. I'm going to be hosting that with our team. We're going to have a bunch of great speakers. You'll learn a lot. We'll have some great market profiles. Things, they are changing, as Bob Dylan said, or times they are changing is what he said, actually, I think. And it's really important to stay informed. And that's why we want to see you at our virtual event on Zoom, real easy. And then, of course, at our live event in January. All right. Thanks again. And until next time, happy investing.